Friends, here I have a question for you. Do you want to retire early? Do you want money for college? Do you want money for vacation? Do you want money for marriage? Do you want money? If yes, you should start saving and investing. Start as early as possible. Start small and be consistent. Build wealth step by step. Hi friends, my name is Rakesh Amanani. I have MBA in finance and I will be sharing my journey of investment. I'm going to talk about investing for beginners. I'm not a financial advisor. Everyone has different situation and appetite for investment. This is just a learning experience and we want to learn from each other. So I'll be sharing my experience of investment. Let's do a financial freedom. Let's everyone have a financial freedom. To get financial freedom, I believe that you need to know ABCD. A stands for attitude. You have to change your attitude. If you want financial freedom, you have to change your attitude. You have to you have to do something different. You have to have positive attitude, right? Stop blaming games. Stop blaming others for you take the blame. You should be able to take the blame. At the same time, you should be able to take the credit. So credit yourself, blame yourself. Complain. Stop complaining. Stop complaining. Stop saying that, oh, I cannot do this because of this. Stop complaining. Need to have a desire to win. You need to have a desire to successful. You need to have desire for investment, and stop excuses. We always see a lot of people, they say like, no, I don't have money. No, I can't spend $25. I am so busy. I'm this, that, you know, various different types of reasons they will have, and they will say we don't have money to invest. You can start small. You can have $25. You can have $10. Nowadays, a lot of this exchanges they accept even $10. You can invest with $10. So slowly, like you don't have to have everything together. You can start with small. Start small and consistent. So if you have A, B, C, D, E of investment, you can really be successful. So if you like my video, if you think that this video is good and it can help you in something, please subscribe. Helps our channel to grow. We come across this word called investing. So what is investing? Why do we invest? It's basically we work very hard to earn money. We work very hard to earn money. We want our money to work hard for us. Investing is something we want to put our money to work for future appreciation. So in future, we can get extra bonus, right? Whatever we invest, we should get more money than what we have invested. And our short-term goals, long-term goals, financial freedom, those are the most important thing for why we invest. And how do we invest? We invest consistently. We invest slowly and, but consistently. It doesn't have to be all at one time. You can slowly invest step by step and make your money grow and later sit back and let your money work for you. Recently, we have been hearing this word called inflation and consistently because the inflation as soon as you turn on the TV, you will hear this word inflation. So what is inflation? It's basically the buying power of $1 or a dollar over time. So whatever you have, whatever you were able to buy 30 years back, are you able to buy now? No, because the inflation is growing, it's going high, and that's why you're not able to buy the same thing, now. The cost has been increasing, the expenses have been increasing, everything has been getting costly, expensive, and you see this graph showing that buying power of $1 over time from 1800 to 2022, and see how it has been decreased. Like now, this is USD inflation since 1800 annual rate. So it's very interesting to see how the dollar decreases, and this will happen in future also. Whatever you are able to buy today, 30 years down the line, you will not able to buy at the same price. The price will increase. We used to like for example, housing. People were able to buy houses for 45,000. Now you can't under 100,000. Now you can't. It's expensive. These are like no now. Next level is looking like half a million or $1 million. If you want to buy a good house, it's half a $1 million at least, and it's going close to $1 million. In future, it might go further. Then average house will be like $1 million in 30 years from now, and that's what is the inflation like because the prices, the cost is increasing, and we have to fight the inflation. To fight the inflation, one of the way you can do is you can invest. So for example, like if you had a dollar and you kept that dollar under the bed for next 30 years, what will be the value of that dollar? Technically the dollar will be dollar, but you will not able to buy the same thing what you're buying for $1 30 years back. So once you decide that you want to invest, the question comes: what type of investor are you? What is your risk level? What is your time horizon? Are you conservative? Are you moderate? Are you aggressive? Are you young? Are you about to retire? What is your risk level? Can you take risk? What happens if the market goes down? We have been seeing that recently the market has been going down, crashing, and do you need money at that time? Because then investing might investing can go either way. It can go up, down, sideways. So if you need money right away, and if the market is down, you'll be losing money. So that's why I always suggest that I always say that this in my case, I try to invest for longer period of time, and that's what the investment is. It's a slow process, and you invest for long term. Whether you're doing for retirement, 20 years, 30 years down the line, and as you come close to your retirement, you change your strategies. You start with conservative, then go to moderate, then become aggressive, then slowly reverse that whole thing and become moderate and get to conservative when you're retiring. One of the biggest challenge of investing is finding your starting point. Finding your starting point is the most challenging point because if you ask anyone, do you want to invest? Do you have money? They say, oh, I'm short of money. I don't have money. I cannot. I have so much expenses. I can't save money. I can't invest. You know, and that's one of the main reason. The starting point is very important. And once you start, then you have make it like I would say make it automatic. I like one of those book which is called Automatic Millionaire by David Park. It says that you don't need to be rich to be millionaire. You need some consistency. You need some to start somewhere and you make it automatic so you don't even see and let your investment compound. Compounding, ninth wonder of the world, as Einstein said, is one of the best way to increase your return. Whatever basically what it says is that whatever you invest, you get some dividend or interest or appreciation. You reinvest the same thing into the same stock again and again and make it compounding, and make it long term. Like you start early and keep it for long term, and that's how you can really achieve your goals. And that's so first thing is to make a starting point, and then later you have to make sure that you are you have certain goals. What exactly you want to do, how long you want to do you want to do for 10 years, do you want to do 5 years, do you want to do for 20 years, right? And if you're thinking that you want to do for a day or two, then you're not investing, you're trading. They're two different things. You can trade, so investing is different than trading, because investing is like you're letting your investment grow and you're not doing anything. Sometimes it's an active investing, but most of the time it's passive investing, and that's what I believe in, that passive investment. Like when you're sleeping, you're still making money. And I will be coming out with a lot of other series and videos where we'll be talking about how to do investment and how I have been doing my investment and how I can sleep at night and still making money. So here's what I do. See, we work very hard, and we have only one life to live. I want to enjoy my life. I want to have fun. I want to do things which I like. And that's where I start with. Whatever money I make, the first thing I do is I try to pay myself. I want to do something which I like, right? And once I pay myself, I start saving money for emergency fund because there might be some emergency. I want to save it for rainy day. I want to make sure that something goes wrong. I have some money in my bank account, in checking or saving, which is liquid. I can use that money anytime. I would suggest like 6 months at least we should have. If you can do it 1 year, that's the best. But if not, at least 6 month money should be kept aside so that anytime if there's a rainy day, any bad time comes, you have money cash in your hand, right? Or at least in close to your hand where you can withdraw the money. You know, the next thing which I would suggest is, which I do myself, is invest in yourself, invest in education. Try to educate yourself. Try to learn things. Keep your mind open. There are so many things we can learn from each other. There are things which you can learn every day. And there are so many nice books, material, YouTube. Nowadays, the digital world, has become such an amazing thing where you can learn from each other. You can learn what is going on, and on YouTube, on social media platforms, and various things you can, or you can, or a simple thing, you can buy a book and read the books, or you can go for college education. People go to college for degrees in finance and investment and personal finance and so many other things. There are so many things to do. Um, and make sure change bad habits. We all have some habits, right? They might be good, they might be bad, and it doesn't matter how the habits are. If you think they are not good habits, you can change the bad habits and develop a rich mindset that I want to keep a goal. I want to become a millionaire in this many years and work towards it, right? So what you spend, whatever you spend, right, should be less than what you earn. That's one of the way to save. The only way to save money is whatever you are earning, you should spend less than what you're earning. Set goals. Set goals for yourself. If you can do any of those things, and if you can learn any of those things from my video, that would be win for me. If I can change one person life, that will be, I would be consider myself as a winner. My goal is to reach out to all, the new investors, those who are beginning their journey in investment, and help them to get to the next level. And if I can achieve that goal by giving the right advice, by giving the right suggestions, and this again, these are the things which I would be doing. You, and as a person, you are different than me, so you will have to find your own way. If you like one or any of those suggestions, yes, welcome, you can take those suggestions. But if you think that this is not for you, you can always think differently. Set your own goals, think differently, think out of the box, and try to achieve those, whatever it is. There's no right or wrong here. Just achieve those goals and try to be successful in your life. Once you have set up the goal, now things come like, where you want to invest, what you want to invest. So, one of the easiest way to invest is stocks. Nowadays, it has become such a simple thing to invest. Like you can open an account in few clicks, and you can start investing. There are so many new apps and exchanges where you can invest money. You can just put money there. You can do ACH. You can send money from anywhere, and then you can start investing few clicks. And so you can start, if you're working, you can invest in your 401ks, you can invest in mutual funds, you can invest in annuities, you can invest in retirement funds, you can invest in stock, bonds, ETF. And then another biggest investment we do is buying a home. So if you're ready You can start buying homes so that you don't have to pay rent, and you can invest in your own home. So you can still invest in the real estate. If you you can invest in life insurance, whether it's term insurance or permanent insurance. You can invest into that. So your financial strategy should come around these things. There might be something else also. You can do so many other things. You can invest in autographs, foods, painting. You can invest in commodities. Gold, silver, oil. So many other things you can do. Nowadays you can invest in cryptos, blockchain, cryptocurrencies. That's how you should start with. You can start with something and keep going. My personal view will be, this is again my situation I'm talking about. Your situation might be different, right? But so I would always start from, stocks. That's the easiest way to start, and I would put into mutual funds or ETF, or retirement funds, and slowly and conservative. I will be more conservative in the initial stage, and then slowly, once I get grip of the stock market and get the idea of what it is, and then I will start getting into moderate, like where I can invest in some in stocks and good stocks, and then slowly I will get into aggressive, where I can invest in growth stocks. And once I'm done with that, and then now I have, passive income coming every month from my conservative investment, and then moderate investment, and then, now I can think about, okay, you know what? I can invest into gold, silver, cryptos. That's money which cryptos investment is very risky. So I will only invest money which I am ready to lose. In fact, all of this, everything is risky. Like any investment is risky. It can become zero, or anytime. So we don't know. Means there are so many things, that can, if not zero, we can go negative, or we can lose money in that. So we have to be very careful when we're investing, and start slow, simple, easy, and slowly, slowly, as you get the idea of investment, start getting more aggressive when you're young, and you can, you can take that risk, start being aggressive, and then, as you come more towards retirement, come backward, become moderate, then go into conservative, and then save you all your money and use for your retirement.